It's Bob Hoopsher, and this is the Gaining Perspective podcast, where we bring you insightful conversations with some of the top thought leaders in the investment advisor profession and investment management industry. I am the founder of Advisor Perspectives and a vice chairman of Vetify. Schwab Charitable donors gave $4.7 billion in 2022, despite the difficult economic environment, and that is up 7% from the year before. Schwab Charitable's mission is to increase giving in the U.S. with donor advised funds and philanthropic resources that make charitable giving tax smart, simple, and efficient. Here today to talk about how advisors can help support clients' charitable giving and planning and the benefits of a donor advised fund is Fred Kaynor. Fred leads the growth team at Schwab Charitable, which is responsible for partnering with donors, financial advisors, business partners, and charities to increase the impact and efficiency of charitable giving in the United States. So, Fred, tell me a little bit about your career path, what led you to join Schwab Charitable, and maybe a little bit more about your role there.
Yeah, sure. Well, thank you very much, Bob, for having me. It's a pleasure to be here. I have spent the better part of 25 to 30 years in financial services and have been in a variety of different roles during that time, marketing roles, relationship management and sales roles. It's been a really wonderful and exciting career for me. I always wanted to find myself with a professional opportunity that combined my experience and skills that I acquired over that period of time with really being a part of an organization that was committed to giving back to the greater good. And back in 2014, when I had the opportunity to interview for a position at Schwab Charitable, it did exactly that. And, almost 9 years later, I've never looked back and I've never been more proud to be a part of an organization.
Well, Schwab is certainly a great company, and I've been lucky to interact with the people there on many occasions. Most of our listeners will know what a donor advised fund is, but for those who not, just give us a quick explanation of how they work.
Sure thing. A donor advised fund, Bob, in its simplest term, is an account for charitable giving. It is an account whereby it's a threefold process. Donors contribute with the support of advisors. Donors contribute a variety of different assets: cash, non-cash assets like publicly traded stock, restricted stock, collectibles, real estate, etc. We liquidate those assets on their behalf. The proceeds of that liquidation go into the account. And then the second step is invest those assets. So once they're in the account, those assets are invested for potential growth over the period of time that they're in the account. And then the third and final step is that they recommend a grant to the 501c3 nonprofit charity of choice when they're ready to distribute some of those assets from that donor advised fund account.
And the essential advantage is the acceleration of the tax deductions that you get when you contribute to a donor advised fund.
That's exactly right. There are many advantages to the platform, but to your point, not the least of which is when a donor makes a contribution to a donor advised fund, contribution qualifies for an immediate fair market value tax deduction at the time of the contribution.
So historically, charitable giving has been correlated with market performance. When the market does well, people give more. We had a bruising 2022, and it seems like charitable giving would not be at the top of mind for clients or their advisors. But as I noted in my introduction, your clients donated almost $5 billion. How does that fit with your experience? How interested were clients in charitable giving?
It's a pretty remarkable story, and it's a testament to the commitment and generosity of our donors. There's no question about it. So what was remarkable to us is this particularly challenging and volatile past year. Despite that volatility and that economic uncertainty, people were equally, if not more, committed to their charitable giving goals than they were before. And what's the beauty of the donor advised fund is in its economic resiliency. So when donors make a contribution to their donor advised fund account, generally speaking, they do so when they have the assets to contribute. So if they've experienced a large wealth event, if they've taken a company public, if they've retired, and they have the assets to give, they give them right then and there. The beauty and the resiliency of our solution is that that is an irrevocable gift to a charity. Those assets are in the account, hopefully growing over time with a successful approach to investing them. And so when the need is the greatest. And frequently we find that when there's market volatility and economic uncertainty, that need spikes. Those assets are already there in the account. They've already gotten the contribution into the account. It's already been donated. They've already received the tax benefits, and those assets are growing, and they're able to be distributed via grant recommendations to the charities that they wish to support and the causes that are nearest and dearest to them. So the beautiful application of the donor advised fund during these difficult economic times was that despite that volatility, those assets were already set aside for charitable giving. The need was greater as a result of that volatility, and people had the opportunity and the wherewithal to give more than they otherwise would. And to your point, they granted a record $4.7 billion to almost almost 995,000 total grants to over 117,000 charities. And just notably, that is 7% more, or nearly 300 million more, that went to the charities compared to the previous year.
It's wonderful to hear that the spirit of charitable giving is alive and well, despite a market that did historically very poorly. How are advisors handling the conversations about charitable giving now, particularly when in a environment where the market, both stocks and bonds, have been highly volatile this year? We're facing a lot of uncertainty, most imminently with the debt ceiling. How are they handling, and how should they be handling those conversations?
It's a great question, and it really is dependent on a number of different factors. If these advisors have individuals and families that are charitably inclined, now more than ever, those individuals are likely looking for the same efficiency that they are looking for with their other savings and investments. They want to achieve the same impact with their charitable giving that they do with their other assets and resources. So if they're charitably inclined, and if they notice that they give a significant amount to charity, generally speaking, the advisor in a fairly casual way can just check in. What are you doing to support the charities that you choose to align your philanthropy with? And then maybe discuss with them the possibility of being even more efficient and having more of a significant impact by giving assets that are able to qualify for a tax deduction, and non-cash assets where, theoretically speaking, they could avoid capital gains by donating them to a donor advised fund, which means up to 20% more going to the charities that they choose to support, as opposed to selling those assets themselves and then donating the proceeds directly.
And that 20% more.
It's what they would otherwise be subjected to in the way of capital gains if they sold those assets first.
Okay, thank you.
Those are the type of questions that advisors could think about asking, particularly for those clients and families that really embrace philanthropy as an active part of their overall financial plan.
So when advisors make those calls to check in, what's in it for the advisor? How should they structure those conversations to make sure that it resonates with their clients?
That's a great question, and again, it really there's a lot of nuances, and it really would vary by the nature of the client, how philanthropically inclined they are, and what their approach is, what vehicles they use. For example, if they have a private foundation where they have family members that are employed by that private foundation to administer the philanthropy. So there's really not one particular answer, but I think that the best way to do it is to just simply touch upon the topic of charitable planning and provide them with access to advice, tools, resources that we provide to our advisors to help these individuals and families understand the most efficient and tax smart way to achieve maximum impact. Schwab Charitable has developed a number of tools, incidentally, Bob, that advisors can use on behalf of those clients in that regard. So one example is what we call our charitable giving guide, which is basically a comprehensive guide to help individuals and families that, again, are philanthropically inclined to really map out a plan for their philanthropy and achieve, truly maximum impact with how and what they give by being really thoughtful and strategic in the process. Just one example of a tool that an advisor can use in the course of those discussions with philanthropically minded clients.
Well, we will have a link to that charitable giving guide in the notes that accompany this podcast, along with some other links that I'll go over later. Why have donor advised funds become so popular? You talked earlier about one key benefit in terms of the acceleration of tax deductions. Uh, but is this a case of advisors doing what's easy? Why not just set up a foundation for the client?
An excellent question, Bob. And there are. It's not always necessarily an either or situation. Frequently, we have a lot of advisors and clients have both vehicles. It really depends on really what their philanthropic goals are. But generally speaking, a donor advised fund is highly efficient. It's very tax smart for the reasons you just mentioned, and it's one of the least costly and most effective tools that these advisors on behalf of these clients can use to really, again, achieve maximum impact with their philanthropy, the same way that they would with the other savings and investments that they're managing on behalf of these clients. There's not, generally speaking, any overhead. There's not any excessive amount of cost or administration required. It's pretty much fully automated, and it's really easy to navigate, and it's just a highly efficient tool that can work very much independently, or it can work in conjunction with a private foundation. There are different kinds of gifts that you can make, for example, from a private foundation versus a donor advised fund. So, some frequently we have seen these clients and the advisors supporting them utilize both if they have different objectives.
What are the other benefits besides the tax benefit that are driving people towards donor advised funds? You mentioned the cost. Give a sense of what the cost actually is and whether those other benefits are as important as the tax considerations.
Yeah, so it really is in the, notwithstanding the tax benefits, it's in the efficiency and in the low cost nature of our solution. Really, there are no excessive overhead fees or costs associated with our solution. There's an administrative fee that starts at 60 basis points, and the higher the balance, the lower the fee. It's on a tiered basis, and that's pretty much it. Beyond OERs for the investment options. Now, whereas with a private foundation, there can frequently be significant administrative costs associated with the organization itself, the payment of salaries, and so forth. So to answer your question again, it's just what's driving people more and more to donor advised funds is that it's low cost, that it's highly efficient, and it really doesn't require any significant amount of management or oversight because it's such an automated and efficient tool.
One of the trends that I've seen over the last several years is the popularity of alternative investments, both on the liquid side and then on the non-public side with hedge funds and venture capital and private equity. What does that mean for charitable giving?
So we have that's a great question, and alternative investments are definitely an area of interest for certain donors and advisors who support them. And generally speaking, what we're seeing is more people that turn to alternative investments are looking for additional ways to invest in a manner that aligns with their personal goals and values. So for larger accounts, generally in the case of Schwab Charitable, alternative investments are used, generally speaking, by our larger accounts and managed, of course, by an advisor. And those would include hedge funds, private equity, venture funds, impact investments, and so forth. And it's an area that we definitely see interest in, and we definitely have clients with larger accounts that are embracing more and more. And I think what they're doing is they see alternative investments as a way to align with their, as I said before, their own personal values and goals. And it also is a way for them. One donor put it really well. They said, "I want my charitable dollars to start working even before I grant them to charity." And frequently, we see that some of those alternatives that they recommend or they ask us to explore for their accounts and for the assets they're in, they view them as an opportunity for achieving that goal.
How can advisors maximize the efficiency in their practice when they are supporting clients with charitable giving and charitable planning? Uh, are those activities very different from what an advisor is typically engaged in, or how does that fit into their workflows and into their practices overall?
Results from our benchmarking study. We have an annual benchmarking study of about 1,100 investment advisors, which suggests that charitable planning is among the top value add services that are offered by these investment advisors. In other words, charitable planning has become more and more of a priority for these clients, and it continues to grow beyond tax planning and other areas where you would think it wouldn't quite be as popular. So it's definitely becoming more and more of a priority for these clients. And I think more and more advisors are embracing it as sort of an integral part of their practice to be able to address that growing need. I think the advisors really have an opportunity to leverage a variety of tools and resources from Schwab Charitable and other DAF providers to be able to really take a very thoughtful and strategic approach to supporting these clients with their philanthropic goals. We have planning tools. We have, as I said before, that giving guide, which helps them to, provide a higher level of consultative support for these clients in a way that really engages them in an effective manner. I will also say that I've heard from a number of advisors, Bob, that when advisors are trying to expand and broaden the relationships with these clients, particularly on a multi-generational basis, interestingly, they say that more and more, the number one thing that facilitates those conversations is generally around philanthropy. So the more that they can incorporate that into a multi-generational practice, the more likely and the more successful they are at retaining and expanding business with these clients, again, across generations.
How does an advisor know if a client is a good fit for a donor advised fund?
Variety of factors would be considered. Number one, are they philanthropically minded? Do they already have a plan for charitable giving, and are they giving to worthy causes and their alma mater, their house of worship? Providing support for disasters as they arise. That's the first thing. The second thing is, have they had a recent wealth event where they have a significant level of exposure from a tax perspective? And would there be a way, if these people are philanthropically minded, to mitigate that tax exposure by leveraging an effective tool for charitable giving? Those are the type of things that advisors consider when they engage on discussions around charitable giving with their clients.
And there's no real minimum, or is there a minimum to set up a donor advised fund?
No, sir, there's not. There's they can open an account, zero balance, and they can contribute to it. Ideally, we want to make sure that our donors utilize these accounts on an active, engaged basis. So, we're not by any means suggesting that you should open an account and just leave a zero balance for a long time. But at the same time, we want to make it accessible to as many donors as possible, as many people that really want to make philanthropy a part of their broader financial plan. We want to be able to make our solution accessible to them.
Are there any questions that I didn't ask that I should have asked?
I don't think so. I think we covered pretty much everything. It's an exciting time, and we are incredibly grateful and humble to our donors and to our advisors for how much they recognize the value in Schwab Charitable and our solution in helping them to achieve their philanthropic goals. And we are going to continue to do everything we can to continue to modernize, continue to improve, and ultimately make it as accessible to as many people as possible.
If there's one key takeaway that you'd like to leave with our audience of advisors about the key advantages of a donor advised fund versus other ways of charitable giving, what would that be?
Over 3,500 advisors currently using our solution today on behalf of their clients that give to charity. There are multiple ways that these clients can embrace philanthropy and give to charity. I would suggest that in the spirit of trying to provide clients with the most efficient, low cost, and high performing solutions on behalf of these individuals, these clients, these families, ours is among the very best in class. A donor advised fund really meets a need, facilitates the ability for these individuals to give with maximum impact and minimal pain. So I would suggest to them that this type of solution is very much in line with what we're trying to accomplish more broadly on behalf of these clients.
Well, thank you for the work that you do on behalf of all these charities that your clients are donating to. We'll include a link for more information about Schwab Charitable in the notes that accompany this podcast. There'll be 6 white papers. One is that comprehensive guide to creating a giving strategy that Fred mentioned earlier. There'll be others about why charitable giving makes sense to clients, how a Schwab charitable account works, ways to invest clients' charitable assets, tax smart charitable giving tips that you can share with clients, and a case study of one of the clients that Fred and his team have written up. Fred, is there anything else you'd like to add?
I don't think so. I really just want to say thank you to you very much, Bob, and thank you to your listeners for the opportunity to share a little bit more information about Schwab Charitable and donor advised funds generally, and we are very, very grateful for this opportunity. Thank you.
You're welcome, and thank you for listening to the Gaining Perspective podcast with Bob Hoopsher, today featuring Fred Kaynor of Schwab Charitable. To support our podcast, please share, subscribe, or leave a review to help make our podcast more findable for your friends and colleagues. You can subscribe to Gaining Perspective on iTunes, Spotify, and Stitcher.